The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good. Billy Ray, feeling good. Lewis, welcome to the offices of Duke & Duke. Ladies and gentlemen, we have trouble in the Heritage House this morning. Here in Philadelphia, the prestigious Heritage House that we belong to since 1903 has now endorsed the fact that Yale University law students have actually come out against someone and it presumed them to be guilty instead of being innocent, which is against the Constitution of the United States. So we are withdrawing our membership from the Heritage House today and are going over to our prestigious YMCA. Boys and girls, take a look at that picture. That is Dr. Ruth Miller. She's 95 years old now. In the back is her granddaughter, Jennifer. She's an orthopedic surgeon in Indianapolis. And the two girls on the side are her great-granddaughters. And anyway, she is still alive, but unfortunately, she doesn't have any recollection of anything. She's suffering from Alzheimer's, but her health is good, her spirits are good, and she's doing okay. So thanks to one of our listeners on TFNN sent me the picture yesterday and told me, because I was told that she had passed away early this year, but they just moved her to another institution. So anyway. No, Marshall, not anymore. Anyway, well, I'm sure she had a position on at till the very end. Let's take a look here at the DAX, of course, and then we'll look here at the FTSE. You'll notice that the FTSE and the DAX have basically had beautiful Gartley patterns and equal rallies coming off the bottom, which is very, very nice. But there's one market that we have to pay attention to, boys and girls, and that is from our good friend, Mr. Z. Folks, I don't know if you're in the Tiger Den or not, but you ought to pay attention to what this young man does. It was about 2 weeks ago when when the gasoline was down at that 78% level at around 276. He came out with a really good strategy, and you can see what's happened. We've gone from 276 to 306. That's 30 handles in natural gas. Now we have a possibility of a double top in here, but frankly, you have to get down hard today for that possibility to become good. The reason for that is, if you'll notice the low that we had back on that triple bottom, that could be another ABCD taking it up to 320 easily in the natural gas. So we've had a nice run here of about 10 days straight up. We had one down day. And so it's acting, relatively nicely. So hats off to you, Mr. Z. That was an absolute beautiful trade, and I hope you had the Widows and Orphans Fund with Sister Mary Perpetual involved like you usually do. So great job. Okay, let's take a look at let's just try to get this thing working here first, and then we'll see what we can come up with. Let's take a look at the one we watch each day, which is our Apple. And we want to bring it up so we can take a look at where we are. Here's what we were looking at the last time we were on the air. And you'll notice here, we were looking for a rally to come up around the 223 level. That would be an ABCD. And it would also be a Gartley pattern right at the 61% retracement. Now, so far this morning, I believe the Apple has gotten really close to that number. We'll just get this up here and take a look at it. You'll see that I believe we're within about a $0.50 of that exact number. As we take a look at it this morning, you'll notice that we're up into this area here very closely. Now, the reason why I've been posting this was to try to show you that these patterns do work some of the times they don't. Now, we looked at another one the other day. It was very heavily in the news because it had monster moves. I don't know if you remember this or not, but we certainly still have the chart on it. And that is the chart of, I think it's TLRY. I don't know if it's called Twiggler or Twilly or trilogy or whatever it is. But that's what it's been doing. It's dropped from $300 to $100. It dropped $200 a share in A, B, C, D format. Now, they don't always work that way, of course, but this one worked. You know, Apple worked. They don't work all the time, but they work more times than they fail. So keep in mind that, you know, that's the main thing. It's about risk control. It's not about how much you're going to make. It's how much money, you know, that you don't risk. Now, we're having a little bit of a pullback in gold. We're at very, very critical level here at this 1198 level, because if we get much below the 1198, folks, you'll see that we're at that target that we've been looking for. You'll see that would get us down to about the 1188 level, 1186, and that's a 61% retracement, and that would really be a beautiful pattern from the long side in the gold market, in our opinion. Silver's acting extremely well. We got up to the 1460 per ounce. We're now trading around 1443. And if you get a 30-cent pullback in silver, 36-cent pullback in silver, I would buy it, because the long-term charts on these look very, very bullish. Now, we have the oil report coming in today, and I think that's going to be very important. But before we get to that, I wanted to, let's hold on here 1 second here and see what's going on. Where's a low-risk buy on sugar? I showed you that the other day. Let's just get it up here again. Hold on. Let's just get to my futures section here. Oh, dear. I messed that one up. Just give me 1 second here, boys and girls, and we will get it up here. There we go. This is October sugar. We don't want to do October. We want to do the March sugar, and I think that's right below it. I hope there it is. Here's March sugar, and I believe March sugar is right around 11 right now. I believe it's right at the 78% level in March sugar, and we'll see if that's going to be the case. What were we talking about? Oh, I wanted to go into the for 1 second here about the NASDAQ, because we had a really interesting point here yesterday in the NASDAQ. You know, we were down a great deal, and we were sitting right at the 78% level, right at the opening, and then we exploded. We went from 74.70, rallied 130 handles, and you'll notice that it's hit that 78% level 3 times, folks, at that 76.30 level. So that's a very important resistance level. If we get above that, we're going to make new highs. If we can do that, at least in the NASDAQ. Whether we do it in some of the other indices, I'm not quite sure, but it has a lot of resistance at that level. The Dow has been the weakest this week, but remember, it has been, you know, it's been the strongest all along. So we'll see what's going on with that as we go through, you know, some of the things. The one market that really has our interest at our 24/7 service is the fact that we're having some very, very bullish action in the grain markets in the face of some really negative, really negative fundamentals. So pay attention to those grain markets, folks. They could have really strong legs here. We're going to post the Dow from yesterday, then we'll be right back after these few words.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. Monday, September 24th, TFNN is launching a new updated version of our website. You can still visit us at the same TFNN.com URL, and starting Monday, you'll be able to experience the new and improved TFNN website. If you're a current subscriber, don't worry, your subscription will be automatically transferred. The new TFNN.com will allow much easier access to all your account and subscription information. Get ready for the new TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks. We're going to talk a little bit about bonds and notes. We'll spend time on the bonds. We have the Fed going to act today. Everybody's expecting them to raise rates by 0.25%. And they've been raising for a while now, and of course the bonds have been going down. If you look at this bond chart, you can see it does have some bearish connotations to it, but we are extremely, and I emphasize extremely, oversold. And if you'll look just a little bit lower than where we're trading right now, right around that 139.08 level, to 138.08, there's some major support coming in at that point. If you were to get a really strong sell-off in bonds today down to that level, I would really take a look at that for a potential, at least to cover your shorts if you're short, and potential for going long. So that's one of the things that you want to pay close attention to. Now, we're also being affected today in the currency markets because the dollar is a little bit stronger, i.e. the euro is a little bit weaker. And if we take a look here at the euro on the longer term chart, let's just get this up here. Give me 1 second, boys and girls, so I can get up the chart so we're able to see it. There we go. There's the euro chart that we're looking at. And if you'll notice that last ABCD, now this is a 4-hour chart, so you can see the last little ABCD pattern that you have here. Well, this is the sell-off that we're looking at today, and that's going to get us down most probably, down, well, it's probably go a little bit more, but with the 382 retracement on this comes in around 117. And of course, with the Fed in there today, it'll probably be very, very wild. So you need to pay close attention to that. That's directly related to the chart that we've looked at several times in the U.S. dollar index. We'll get this up so you folks can take a look at it, and you'll see that the U.S. dollar index has completed that ABCD pattern there at 93.30. We're now above 94 right now, so it started to move. That was an ABCD pattern, and that was very similar to what we were looking at when we were watching the euro, because the euro at that point had just completed. If you'll get this up here and take a look at it, this was the ABCD pattern that we posted in the newsletter over the weekend, the fact that you had a beautiful ABCD pattern at the 61.618 expansion at 118.10. And folks, that was the high. 118.10 was the high, and then now we're down trading at around 117 and 117.30 to 40. So there should be some pretty strong support if it's still bullish at the 117 level. I believe that it is. So we'll just have to wait and see, what the reaction is going to be, to the market whenever the Fed comes out. Remember, the Fed is always lagging the market. If you don't believe that, folks, just go into the internet, Google it, and you'll see some charts that shows how they react to the interest rates. They don't set interest rates. They react to what the market, is actually doing with some of these things. Now, if we take a look at the E-mini S&P here from yesterday, we had the really big butterfly pattern form up there at that 29.46 level. We dropped about 25 handles and stopped right at a 50% retracement from the low on the 17th and a 38% retracement from the low on the 16th, and from the 11th. And those were both spot-on numbers. So you can see the support that we have at 29.19 in the S&P. Now, going below that, sets up a move all the way down to 2,900, because that would set up a very large ABCD pattern, taking it, quite a bit lower if, in fact, that does happen. But certainly, it's a pattern that if it goes below that 29.19, that's what you'd be looking at. You're right, David. I remember that irrational exuberance quite a bit. 1996. That was the start of the dot-com bubble, actually. And it took 4 years for that thing to work its way out. But this is not like the dot-com bubble. That was a once-in-a-generation type move, because you mentioned it the other day that these markets would move on. They didn't even have earnings. They would have expected sales, not earnings. They didn't have any earnings. They were always losing money, but they have expected sales, and they would go up 50 to 100% in price. I mean, that one was like the tulip bulb mania, and it was a really big one. I think we had that. Let me see if we have that chart up here. Yeah, here it is. Here's the one from. This is the one from Cycles Research. Let's get this up here and take a look at it, and you'll see here. This is one from our good friend Bill Meridian. That's Cycles Research. But you'll notice here in the tech bubble that we had in 1999, you see how high that went up. That was certainly a mania, and you saw how it came down. Then they had the housing bubble that we had in 2007, and now we're in something else, but we don't know what it is yet, do we? But it will happen, but when, who knows? But it most probably will come when some people are not expecting it. But whether that occurs right away or not, we'll have to just wait and see. Now, one of the currencies that we're really watching very closely, of course, is the British pound, because of all the things that are happening across the pond over here. And if you take a look at this British pound, now this is just a 60-minute chart, because if you remember on the daily, that 133 was a perfect ABCD pattern. Oh, we got a caller in today from Ormond Beach. I guess that's Florida. Mike, are you there?
Yes, I am, Larry. Larry, I caught a little bit of what you said about 10 or 15 minutes ago about the grains possibly making a good move. I got into the corn ETF a couple days ago, and I'm wondering if maybe I should add to my position.
Mike, you really shouldn't talk to me, because I'm just too bullish. I really am. I hate to, give you an opinion on something. Technically, I can't see a reason to add here. I like to buy on a little bit of a weakness, but the market is acting so beautifully in the face of really negative news. I mean, these tariffs, that soybean market has just turned on a dime. The soybean oil, I don't know if you're in that, because we're in that on the, but that's moved almost $1,500 already, and it's been a huge move, and the soybeans have moved over 60 cents a bushel. And even as the news comes out, as it's bearish, the market continues to rally. And not only that, but we're in harvest pressure. There should be harvest pressure coming in, and I think the farmers have pretty much sold out. But you know, if you add, you got to put a stop in, my friend. That's all I can. That's all I can tell you. But if we get above 375 in that Christmas corn, that could go to $4 very, very quickly. It wouldn't take very. And this is nothing about fundamentals, Mike. You know, it really isn't. I spent the half hour on that webinar with Adrian last night talking about the bullishness that we're seeing in some of these things. In fact, let me just push this chart out so you'll see what we're looking at in this Christmas corn, because it really has a tremendous bullishness here in face of terrible news. I mean, you can see the big drop that we had from 410 all the way down, you know, to 333. That was because of the first tariffs, plus the weather turned really, really cool, and the rain came in, and that made it nice. So stay with us, Mike. Okay. Oh wait, we got to. I hope that helps. We got Stan Harley at the gates, but thanks for calling in, Mike. I really appreciate it. You bet, buddy. Bye bye.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have Stan Harley of the Harley Stock Market Letter on the line. Stan, how are you doing today, my friend?
Good morning, Larry, from Phoenix, Arizona.
Well, good morning from Tucson, Arizona, a scant 90 miles away. What are you seeing here, Stan? We're right in the middle of supposedly the most bearish time of the year, and yet we still keep going up. What are you feeling here?
Larry, my views have changed a little bit since you and I last spoke a few weeks ago. I think the market is still in an uptrend. This primary cycle that I've often referred to, which averages about 35 weeks, I had previously thought when you and I had talked earlier that we would top out in early September. No longer subscribe to that view. I think we're going higher probably into the latter part of October. I think we'll probably peak out here about a month from now, about exactly this time in a month. In the very short term, I think we're undergoing a modest consolidation, kind of a back and fill, chop shop. The Dow Industrials, I'll point out, just broke out to a new all-time high just a few days ago. It's very common when a stock or an index breaks out to new highs, you sometimes get a pullback to test that breakout, and I believe that's exactly what's going on now. So I look for a modest pullback into the first week of October, and that retest for the Dow I think will be successful. And then I think we'll regroup, we'll work off the overbought condition, and I think we'll power higher, and I'm looking for a more important high in the latter part of October, right about a month from right now.
Even the transportations I see have broken out into new high ground. And the only one that has really, the Russell has slowed down, and also the NASDAQ haven't quite done it yet, but they're close enough to do it within a day, so it's not really a big deal, I don't think.
I look at the big five, Larry. For me, the big five are the Dow Jones Industrials, the S&P 500, the NASDAQ Composite, the Dow Jones Transportation Average, and last but certainly not least, the New York Composite Index. And I want to see all five of those confirming an uptrend or a downtrend if we happen to be in a bear move. Right now, I'm seeing 4 of the 5 confirm, but the latter, the NYA, the New York Composite, very interestingly, has not gone to a new high. It's recouped about 2/3 of the January to February decline, and the NYA has not yet broken out to a new high. That's not troublesome. It's noteworthy. Throughout this bull market, we get a lead lag involving all 5 of those components of the big 5, and the NYA is lagging right now. I think what's likely to happen is in about a month's time, you're going to see the New York comp get up near its former high. It may go slightly above it. It may go slightly below it, but essentially double top with its January peak and then pull back. And we'll get some type of intermediate consolidation from that point. And then the follow-on run, which I see happening early next year, will carry the New York Composite and the other 4 components into record high territory. It's a bull market, and there's plenty more bull to come.
Okay, let's move over to Italy for a little bit and talk about one of my favorite people, Leonardo da Pisa da Fibonacci, and you're also talking about Lucas numbers. That's something that we don't hear very much here at TFNN. You want to explain to us what you're explaining to your readers here on the Fibonacci and Lucas numbers?
Absolutely. I've done a very detailed analysis of Fibonacci numbers and Lucas numbers. Fibonacci, for folks who may not know, that was not his real name. His real name was Leonardo of Pisa. He was a brilliant mathematician. He lived in the 1200s. And his greatest contribution was the Arabic number system, both the decimal system and the digits 0 to 9. And he wrote a book about this called Libera Bacci, and he basically said the system of Roman numerals, which everybody was using at the time, were archaic and inferior, and doing simple things like multiplication and division were virtually impossible with Roman numerals. And he advocated using the Arabic Hindu number system, and also along with that they used decimals. They did use fractions of numbers. And Europe, of course, adopted that system, but primarily as a result of his being a strong advocate of it. In the 3rd section of that book, he talked about the rabbit problem. And although this sequence of numbers, which we now attribute to him, actually was known in about 200 BC, an Indian mathematician is the first recorded author of that sequence. But because Fibonacci, or Leonardo, his actual name, introduced it to Europe in 1202, it later bore his name. Well, in furtherance of a little bit of history here, a French mathematician named Edward Lucas in the 1800s wrote extensively about Leonardo's work, and he attributed the number system to Leonardo, even though Leonardo was probably not the originator, but he certainly introduced it to Europe. And Edward Lucas also coined the term Fibonacci and attributed that to Leonardo, and that's why we have the name Fibonacci today. But that was not Leonardo's real name. That was a nickname given to him by Edward Lucas. And, of course, we all use that today.
Now, what are the differences between the Fibonacci numbers and Lucas numbers? Are they subtle differences, or what is your...
Fibonacci numbers, of course, by most technicians that watch this program are well known. What is not so well known are the Lucas numbers. And it's a series of numbers that Lucas found, which actually are related to the Fibonacci series by the factor of 1.382. And essentially they are, I call them Fibonacci numbers or secondary Fibonacci numbers. And as the viewers can see on the screen that you're now showing, I've constructed two columns, Larry. One in which I've taken the Fibonacci Lucas series and I've multiplied by 1/2, and the second column I've multiplied by 2. And I just did this just because I'm an engineer and a numbers researcher. And I found that these two columns multiplying the Fib Lucas series by 1/2 and by 2 are very powerful in turning point prediction. In fact, I find they're more powerful than just using the raw Fib and Lucas numbers themselves. That technique has been known for years, of course, but what is probably not well known, and I just kind of stumbled on this, is using the 1/2 counts and the double counts. And my research shows that these are far more utilitarian in their predictive capacity for projecting turning points. As I pointed out, for example, if you take the February 11th, 2016 low, and add 493.5 trading days, that comes out of my column to that. And you also add 305, which is half of 610, to the November 4th, 2016 low. Those two calculations produce a clustering right around January 26th and foretold that major high point reversal. So I would encourage the viewers here to take a look at this, and I'd certainly welcome comments from others, but this seems to be a pretty doggone powerful tool I've stumbled upon here.
Well, your chart certainly looks interesting. It looks like October 25th. That's not too far away from that October 19th. Can you stay on for a little bit longer, Stan?
Absolutely. My pleasure.
Great. Pay a few bills. 877-927-6648.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and we're talking with Stan Harley of the Harley Stock Market Letter. Stan, I posted the chart of this scatter diagram that you've shown here on page 4. Can you explain to the folks, this looks very sophisticated, what you're looking at here on the SPX Daily?
Yes. What we're looking at there is the what I refer to as the primary cycle, Larry. And the primary cycle averages about 35 weeks. And what I've shown here are all the highs and lows going back for the past 3.5 years. And each of these highs and lows on the chart reflect the primary cycle high and low. And more importantly, what I've done is I put the number of trading days between highs and lows on the chart. And then in parentheses, I have put the number from the prior page, that 1/2 count and the double count of the Fibonacci-Lucas series. And as you can see, every single high and low, without exception, corresponds within a couple of trading days of what that tabular listing that I've produced on the prior page has shown. For example, the time period between the May 20th, 2015 high and the November 3rd, 2015 high was 116 trading days. And if one takes a look at that column 3, 233 divided by 2, of course, is 116.5. What is interesting here is, one more point that is really interesting, Larry. It seems as though the preponderance of highs are associated with multiplying the Fib-Lucas series by 1/2. And the preponderance of lows is suggested by multiplying that same series by 2. It's not 100%, but I'd say it's at least 90%. So generally speaking, if you look at the Fib-Lucas series, multiply by 1/2, and look for a clustering effect, you'll find that does a dandy of a job of forecasting highs. And the converse is true across the lows using the ×2 column.
Wow, that's really amazing work. I have not seen anything like that before. It sure looks nice. Let's take a look at your next chart that you have up here on page 5, which is an interesting one. This shows basically that October high that you're alluding to is around the 25th of October. Is that correct?
Yes, and previously I had thought that that this primary cycle in the stock market began from the April low. Just in the last couple of weeks, I've completely changed my views on that by just looking at the pattern structure, looking where a number of indicators that I track that measure overbought and oversold. I came to the conclusion that no, the true cycle bottom actually began from May 3rd. I recognize that's a higher price level, but that's the point of upside acceleration. That's where all the price indicators essentially bottomed, and we turned up from there. Price catapulted above the 50-day moving average, and it really has and has never looked back. And it makes better sense in hindsight, of course. Generally speaking, this 35-week primary cycle tends to be composed of 4 separate trading cycles, and I have laid out the pattern 1, 2, 3, 4, and shown with vertical lines where I think each of these trading cycles has bottomed. The next low point in the 3rd trading cycle is due in the first week of October. Right now I'm guesstimating about October 4th, plus or minus a couple days, either left or right. So I think this consolidation that we're in right now, the Dow's up about 47, 48 points as you and I speak, but it's just basically, it's consolidating. And I think we're going to bottom in the first week in October. We're going to make that the next low in that 3rd trading cycle. And then we're going to ramp up from there, probably pretty smartly. And I see us topping out right now around October 24th, October 25th, give or take a day or two either side, left or right of that time period. And then consolidate into the first part of next year. Interestingly, that October 25th time period will be just ahead of the election. And I'm looking for a low in the first quarter of next year. That's going to be right around inauguration time period. How that's going to factor into all of this, well, we'll let the financial talking heads put their stick on that one.
What are you? You're showing some really interesting things on the market internals. What are you seeing here, Stan? Is it also telling you that the market looks like it wants to go higher?
It does. I take a peek beneath the hood, so to speak. I look at advances and declines. I look at new highs, new lows, and I look at unchanged issues, and track all of those very closely, plot them, and indeed, it does. The structure does indicate that we're undergoing some type of consolidation right now, but again, it supports my thesis for a higher market in the latter part of October.
Okay, that sounds really good. How about the new highs to new lows and the advanced decline line? That doesn't look nearly as good as you would think it would be with the strength that we've had. Any feeling on that?
Well, the New York advanced decline line topped out on August 29th, and it's been consolidating here along with the New York composite. I also track new highs and new lows, and there are several different ways to look at that. I construct what's called a new high, new low line, which is on the screen there up in the upper right-hand corner. I construct that in similar fashion to the advanced decline line. That is, I take each day's net difference between new highs and new lows, maintain a running summation of that in my spreadsheet, and I plot it. And that has just recently broken out to a new high, and it's doing some back and fill either side of the high of January of this year. But ultimately, I look for that to push higher. And as you can see, I have an arrow to the right on the screen, and that suggests the next important high in the market probably in April.
Okay, that looks really interesting. Now, we've only got a couple minutes here, so I'd like to finish up with the world indices that you're looking at here. And one of our questions from one of our listeners, Stan, is do you look at the money flow at all? You know, the M1 numbers or anything like that?
I don't. I'm aware of it, but no, I'm a pure market technician, Larry.
God bless you for it too, Stan.
I don't put too much emphasis on that. I look at chart patterns, I look at recurring rhythms, and try to model it mathematically. And I'm a cycles guy for the most part. Looking at the world markets, normally throughout this bull market, particularly the European markets, they've kept pace with the American markets. Sometimes there's a little lead, sometimes there's a little lag. I place particular emphasis, as you know, on the United Kingdom market. The FTSE tends to lead our market, and not only the FTSE, but the DAX and the CAC are all well off their highs from earlier this year, which is kind of has me scratching my head. That would normally have me being a little bit more alarmist. But I think it's going to be more important about a month from now when we see in the Dow and the S&P in record high territory and the European markets well off their former highs. And I think all of the markets, both in Europe and here U.S., will consolidate into January. And then from that point, I think we'll be set up for the next push higher.
Well, Stan, I want to thank you for coming on. I really enjoyed talking to you. And how will the folks reach you? Just go to the Harley Stock Market letter, and they can get a copy of the letter as a test?
Well, they can go into harleymarketletter.com and reach me that way.
Okay, thanks a lot, my friend. We'll talk to you soon.
My pleasure,
Thank you,
Larry.
Stan.
Thank you.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we want to pay close attention to that 2,900 level in the S&P. I've also posted that level for the Dow E-mini. That comes in at that 26,450 level. Those levels are very important. Going below those levels will tell us that we'll probably have a little bit more of a movement to the downside. Regarding the grain markets, I still think that we're going to be going higher in the grain markets, just a question of when. And as far as the cattle market, we talked about that cattle market up at that 118 level. In the Christmas cattle, we've hit that. We backed off a little more than a penny, but that's not very much. And the December hogs still appear that they want to go higher. If you're interested in buying sugar, today would probably be a good day to look at it because that March sugar is down at the 78% level. You have to risk about 50 cents. I would believe that's around $500 if you're interested in looking at the sugar, but kind of keep an eye on that one. Also keep an eye on the crude oil because we've come off $1 a barrel off of that ABCD pattern that we were looking at. And whether that's going to mean anything or not, certainly remains to be seen, but it is a pattern that is certainly valid. So that's basically, I'll put that, someone's asking about that stock exchange for the Dow E-mini. I'll put that up here to let you take a look at it, and you'll see that we're almost at the 382 down there at that 264, 2,649. let's try it again, 26,490. So going below that level would tell you that we're most probably going to go a little bit lower, but you know, we're really pretty much spot on a 382 retracement, and that's a 3-day retracement only at the 382, folks. That's not a bearish pattern. You know, that's like that euro chart. Even though, you know, the euro's down today and it looks like it's going to go down to 117, that's still a very bullish pattern. So let's live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
No matter what kind of trader you are, 2018 is a great